Welcome back to the channel, everybody. I had a client recently ask me about investing in mobile home parks, and honestly, not my expertise, but I'm very lucky that I got a guy that does. And here's my guy, Mario. Mario, thank you for coming on the show today.
Hey, Joe, awesome to be on. I'm excited to be here. And I love these clips that you put out. So being asked to be on this was a real compliment. So thank you.
Oh, thank you very, very much. I really am looking forward. I just got a few questions. I wrote them all down.
Just a
Um,
few, couple pages.
yeah, we'll be here till midnight. But I think it's a real opportunity investing in these mobile home parks, and I'm really anxious to learn. I know that you invest in mobile home parks. Matter of fact, I'm going to want to get your little biography here for just a second, but I think it's a real opportunity, and it's not something that is widely available. You kind of have to be in the know, I believe. So after today, you're going to have a lot of new competition. So you've done it to yourself for coming on here today,
That's all
because
right.
I've got some great investors that watch this. But Mario, can you give us a little background on yourself?
Yeah, I mean, I started out in business in high school, so never went to college, never had a job after high school, started a business and failed pretty early on in life, which was actually a real blessing. And
Yeah.
after that, I got into single family homes, flipping single family homes. Did well for from 2008 all the way to about 2013 or so. I decided I wanted to get more into commercial real estate and owning cash flowing assets versus kind of a trading model of flipping homes and things like that. And ended up I was looking for apartments to start, and somebody brought me a mobile home park. And it was actually a pretty interesting deal. A commercial banker brought me a deal, and it was a loan, a non-performing loan on a mobile home park owned by a bank. And he said, "Hey, I know you're looking for apartments, but this kind of looks like an apartment. You want to buy the loan?" Because I'd, bought loans before, and
Mm-hmm.
I did. And I did a really great deal on that one. And after that, I realized that it was a very unknown, untalked about niche, at least at the time,
Yeah.
and did well with it and just continued to buy all through 2014 till this year. I've continued to buy. So we own in 5 states, over 1,000 lots. Just been building the portfolio consistent. I have an education company around it, and several businesses that support the industry.
Yeah, I'm going to put your education link at the bottom of this video, so people will be
Cool.
able to go in and check it out.
I can train some more
Um,
competition.
yeah, exactly. We'll put you out of business, Mario.
That's right.
Now, so you have 1,000 spaces or 1,000 properties right now?
Yeah. And I own some self-storage as well. That's not
Okay.
included in there, but on the mobile home park side, that's really been my focus. And yeah, we're at over 1,000 lots right now.
Okay. What's the average size of your lot?
So each community has an average of, call it, 80 lots,
Okay.
I would say. So we're
Okay.
sitting at right about 20 communities right now.
All right. Um, how's the market right now for mobile home parks? It seems like, I mean, we've had a couple people call in and ask, and we haven't had it for a few years. And uh, so I think it must be on fire right now, right?
Yeah, I mean, when I first started buying them, it was pretty much the redheaded stepchild of real estate, and everybody
Yeah.
would look at me funny and, "You're investing in trailer parks? Are you crazy?" And now, in probably the last 3 to 4 years, 3 years or so, it's definitely gotten a lot more attention. And a lot of that comes from investors having a hard time finding yield in other asset classes in the main food groups, right? Especially apartments and self-storage, they started looking for yield, and they kind of went down the quality ladder, right? At least in their
Right.
mind, and they found what we've got. So it's definitely gotten more attention. And what I would say is one of the main reasons too is because it's really consolidating industry. You've got all these mom and pop owners who've owned these communities since they were developed, in the 60s, 70s, sometimes even earlier. And now they're retiring or dying and they need to sell. And now you've got a lot more professional investors coming in, looking at it from a much more aggressive approach, to where they're looking at it more of as an investment versus a lifestyle business that most of the other guys had.
Yeah. Is this conventional financing for this stuff?
Sure. Yeah.
Is
Pretty
it?
much everything that you can get in the apartment space, multifamily space, you can get in the manufactured housing space, except for HUD. There is no HUD financing for manufactured home communities, but Generally speaking, yeah, we've got the institutional guys like the agency, the CMBS, the life companies, all of that. We have bridge. It's not quite as common in the manufactured housing space as it is in maybe apartments, but we do have bridge. We also have the banks, local and regional, and yeah, obviously private debt as well. But it's a very attractive asset class for banks to lend on because they are a very stable property type, especially when the owners of the homes, I'm sorry, when the residents in the homes own the homes. It's a
Right.
very stable asset class.
Now, do most of your tenants, they own their homes? Do you ever have any that you just rent out that are on your property?
We don't. We
You
don't
don't.
do any
Okay.
sort of rental for the most part. The whole point of owning a mobile home park, at least in my world, is I want to have a for-profit homeowners association. Basically, I don't want to deal with, you know, plumbing issues in the homes. I don't want to deal with make ready. I don't want to deal with a lot of turnover. If you just look at us kind of like a for-profit homeowners association and a hybrid with a builder developer, that's kind of what we are because anytime we have vacant lots, we bring in homes, we set them up and we sell those homes and then we collect lot rent underneath them. And after it's all full, all we're doing is collecting lot rent so we can enforce violations, we can, enforce non-payment and take the home and turn around and resell it just like a homeowners association could, but we don't have to maintain the homes, which is the best part. So we have lower
Right.
expense ratio, lower turnover, things like that.
What is the average turnover for your properties?
Very low. We're
Yeah.
typically around 5% a year,
Yeah.
5 to 8% a year. And, comparing that to apartments, it's probably the average tenant turns what every year and a half or so is kind of the average that I've heard industry wide. So we have out of 100 tenants, maybe 5 or 7 move, but keep in mind they sell their home
Right.
to the next buyer. So we're not involved in make ready or turnover. We just basically approve the next buyer to continue to pay us lot rent. So again, we feel a lot like a homeowners association in that sense.
How often does somebody just say, "Listen, I'm taking my mobile home. I'm out of here"? Does that happen very often?
Probably had it happen in the last 10 years, 3 to 4 times.
Yeah.
So extremely rare. Keep in mind to move a mobile home, they're not that mobile. So
Yeah.
to move it, to take it down, move it, you're going to be spending thousands of dollars, probably 5 grand minimum if you're moving it someplace close. And then to set up, you're probably another on the very low end, 7, 8,000 all the way up to, 20,000 to set that home up. So it's pretty expensive. And someone who's living on a fixed income or lower income where they're paying $300 to $500 a month in lot rent, that's a big check to stroke to move. So typically they just sell to the next buyer and the next buyer moves in just like a single family.
Right. About what are, I mean, your average mobile home right now, what are they running? I don't have any idea as far as their retail price.
A new home, we're selling homes anywhere in the high 60s to, obviously it's going to depend on location. If it's in California, you're probably selling them for hundreds of thousands. If you're
Yeah.
in most of the country, you're probably selling for under 120,000. But the majority of the homes, I would say, probably sell sub 100, which is
Okay.
very affordable with,
Yeah.
5 to 10% down and a few $100s as lot rent, very inexpensive mortgage. You're typically in for under the cost of a 2 bedroom apartment
Can
with the
you
mortgage.
walk us through the financing for a mobile home? Is it just, I know you registered with the DMV, so how do you finance it then?
Well, what's interesting about mobile homes is they are registered through the DMV.
Mhm.
They have a title much like a car title. They look just like a car title.
Mhm.
And the leaning process is obviously different. It would be similar to a car lien, is how they're filed by the lender. So there is
Okay.
security interest, but it's not, it's the titling and the leaning process are not through your property appraiser, through your county, I guess it'd be county clerk. It's through your DMV, which makes
Okay.
it, I mean, think about this. When was the last time you had a good day going to the DMV? So it does make
Never.
titling a little trickier. That's probably the hidden secret of mobile home parks that nobody talks about is titles are horrible to
Right.
deal with.
Yeah, I can imagine. Now, do you guys buy for value add? Do you go in, you look for a mobile home park that's been run down and you come in and turn it around? Or do you guys go in and buy a nice clean property and then, raise rents and bring in other amenities? What do you guys do?
So what we do is we buy value add properties. I mean, I
Okay.
would say we've bought some properties that are cleaner, but there's usually a good amount of upside and value that we can add once we've bought it. We have a hard time buying things that are stabilized, especially in the last few years where cap rates were so compressed that just doesn't make sense to buy a mobile home park at a 5 or 6 cap stabilized. I mean, I'd go buy an apartment building if I was going to do that,
Right.
or something much sexier, right? So,
Sure.
in that case, we've always bought things that, regardless of the cap rate going in, we could always get to, a target cap rate of around 10% when stabilized.
Okay. Wow. Now, do you guys come in and add new amenities, or what do you guys do?
Depends on the property. I mean, we haven't come in and put in new pools or any clubhouses. Those are pretty expensive investments.
Yeah.
But we typically will redo the roads, new signage, new landscaping. There's usually a good amount of deferred maintenance at these properties, especially if they've been owned by the same owner that owned it free and clear for a very long time. And they were running it more like you know, um, like a lifestyle business. They haven't been making that CapEx investment throughout their holding period. So we typically have to go in and do that. But, frankly, we haven't went in and converted anything from affordable housing to the Taj Mahal. We typically will make sure that the infrastructure is in good condition and beautify it a little bit. But, they typically own their own homes. Now, when we buy a community that has homes owned by the park, then we will typically either rehab that home and sell it to an end buyer, or in some cases we will sell the home as is and let somebody do their own improvements and sell it at a lower price, similar to a bank. I mean, if
Right.
you're a bank and you got an asset back, you'd be looking at different exit strategies for each one of those. But that's about it.
Yeah. Do you guys ever buy vacant lots and then just start adding pads and then start leasing it out?
We are not in the development business at all, so
Okay.
we haven't taken any vacant land and converted it into a manufactured home community. We've done some minor site improvements and added, a few lots here and there, but it's typically not our business model. Most of the communities that we're buying have had at least some vacant lots already in place that we could just bring homes in on because the infrastructure is already there. One thing that is important for anybody to know who's looking to get into this space is that zoning is really a tough thing with manufactured housing, and the
Okay.
cities and counties really don't want you there. And so any chance that they get to tell you that you're not supposed to be there, they will in most cases. And so to expand the density is pretty difficult, although some markets will allow it, but we haven't done a lot of it. It's pretty much been filling up what we already have. There's maybe a couple of communities in our portfolio that we've looked at and said, we could set up another 10 to 15 lots here. We should probably consider that in the future, but we never perform that in. If we do that, that's basically a separate investment, and that's icing on the cake. It's not
Sure.
something that we would budget based on.
Now, you have to run power and water to each pad, right?
Water, sewer, and power. Yep.
You run them all. Okay. All right. I wasn't
Yes.
sure if they had their own system, or do you put in septic, or do you use, well, in some
Well,
cases you probably do, right?
most of our communities are city water and sewer. We
Okay.
do have a couple that are on private sewer systems, typically
Okay.
septic. I'm working on one right now that's got a wastewater treatment plant, which is basically a small version of a municipal sewer system. But we typically will try and buy things with city utilities just because there's less maintenance there.
Sure,
If
yeah.
we're going to add it, you might be thinking of an RV park.
Yeah.
A lot of times RV parks will have a dumping station
Yeah.
because the RV is mobile, so they can just pull over to that dumping station and empty out there. Here we run, these are permanent for the most part. So you're running water, sewer, and electric right to the home.
Gotcha. If you had an acre of land, see, I told you I had a lot of questions, Mario.
This is good stuff, man. I can tell you got a couple clients that are say, "Hey, can you ask all this for me?"
Yeah, I can see that we're going to get some people. And matter of fact, if you guys do that are watching, if you have questions for Mario, put it in the comments. I'll make sure he sees it, and we'll get responded back to you.
For
Um,
sure.
do you self manage?
We do. Yeah. So
You
we own
do.
a management company that operates our communities. I don't manage my self storage. I've either got operating partners or I use
Right.
third party management. There's not a lot of great opportunities for third party management in the manufactured housing space. There's a handful of large management companies that manage, either large regions or nationally. They don't have a great reputation, but I believe that's changing. You're starting to see some more smaller operators take on third party clients and things like that, but it's not like the rest of commercial real estate.
Right.
If you're getting into the space, you really should plan on managing your own communities. And unless you're buying stabilized assets that are really, really clean, you may be able to get away with just plug and play with somebody else.
Yeah. There's a community right around the corner here. It's right on the 10 freeway. It's in it's I think it's Santa Monica is the city it's actually in. And when you pull in, you can see they're all manufactured homes, but it's like its own little city. I
Yeah.
mean, they've got these mobile homes, but they've got flower pots hanging out front. The mailboxes when you pull in are all beautiful the way they've done it all. The streets are named. It's really incredible what they've done. That thing is full all the
Yeah.
time. They never have a vacancy there.
It's affordable. I
Yeah,
mean,
yeah.
everybody
For Santa
thinks that they
Monica,
want to buy, everybody
yeah,
thinks they should buy mobile home parks in low income areas, but it's not where you want to buy them. You want to buy them in the expensive areas where nobody can get any housing and and need to work in those areas. You want to be the most affordable housing option in that neighborhood,
mhm.
and they stay very full.
Well, there's two of them that are in Malibu. Both of them are right on PCH, so they've got ocean view,
Yeah.
and people are buying them and using them as like second homes so they can go down to the beach. But when you go in, obviously you can see it's a manufactured home from the outside. But when you walk in, it's like you're in a private residence. I mean, it's
Yeah.
a stick built home. And, they've got the big fancy refrigerators and they've completely gutted the interior, made it very luxurious. And they're renting them out for crazy amounts of money.
Oh yeah,
So,
I can imagine. I mean, something like that in a destination or a beautiful location. We have a community in Edgewater, Florida, that's fairly close to Daytona, and some pretty high traffic destinations, and we're right on the outskirts of that. But people are willing to come and buy second homes there from Canada or other places up north because they want to be close to you know NASCAR, and they want to be close to the rocket launches and all of that. And it's a destination. And so they pay a premium for those homes and for the lot rent purely as a second home.
yeah. If you had, I started asking the question, I got sidetracked earlier. If I had an acre of land, how many pads could I get on there approximately?
Honestly, I don't know, but it would likely depend on that
The
county's
city.
density for their
Yeah,
their zoning
the zoning
density. And you
requirement.
probably got a bunch of developer clients that could probably answer that better than me. But they typically have a minimum of a 10-foot separation between structures. It's going to depend on your setbacks from side and front, property lines, things like that. But it's going to be county or city
Okay.
specific based on their zoning and code.
Okay. And then this is going to be my last question, Mario, because I've peppered you like crazy because I know you've got another meeting to get to. So I wanted to just kind of rifle you with them.
This is
What's your
good.
long-term plan with your properties? Are you buying them in hopes that, on the outer edge of the city and the city's going to expand and all of a sudden you're going to develop residential? What are you guys looking to do?
Great question. Yeah, for us, I mean, it's really a cash flow game. We're
Okay.
more looking for long-term investments for cash flow purposes, and our investors have the same outlook. We're not necessarily buying these communities to clean up and flip. We're also not planning to redevelop them. I would say that there's probably some communities within our portfolio that would probably be worth a lot more as a development than it
Mhm.
would be based on cash flow. And that's one interesting thing about these. A lot of them are really good covered land plays because they used to be on the outskirts of town 50 years ago. Town has moved around them and now
Yeah.
they're in the center of town and they're the ugliest thing there, and they're acres of land
Yeah.
surrounded by businesses and everything else. So, we get calls all the time in especially certain properties of ours where they're really interested in just redeveloping the land. But for us, it's a cash flow game. And there's very few property types out there right now that I see as really attractive cash flow. We've had a lot of appreciation, we've had a lot of focus on appreciation for a long time. And so the pricing has gotten out of whack in a lot of property types. And because this property type has so much opportunity to buy from smaller mom and pop owners that have left a lot of meat on the bone, we can make really good cash flow from these, and that's what we're going for.
Okay. And then if I wanted to buy one, how do I find them? Do they come on the open market? Is there a special brokerage I need to reach out to?
Yeah, I mean, I would say that you could always look at on all the normal platforms for, mobile home parks, just like you would for any other property type. And there are some brokers that specialize in manufactured housing. There's not a lot, but there are definitely some, and even larger groups have a division for manufactured housing. I would tell you that most of the transactions that come to market, especially on those larger platforms, their pricing isn't very good. I've never bought anything on market. We go direct to owner all the time. I'm a broker as well, so I can say that. But I just haven't found a lot of solid deals on market. They've pretty much been all direct to owner communication. But you get it with a great broker like Joe, you can probably work some back channels and find some good connections with owners and plug you in.
Yeah. A lot of those deals probably don't even hit the market. So you just do mailers out to them, or do you just sit down and cold call them?
We cold call a lot.
Yeah.
We cold call a lot. We've done some mailers, but at this point, most of our leads have come from three different things. They've come from cold calling, they've come from brokers, but not mobile home park brokers. They've come from just a general practitioner commercial broker that gets a mobile home park and calls me and goes, what do I do with this? Would you buy this? Here, I'll connect you with the owner. You guys put the deal together. And if I get my commission, I'm happy. Right. And those deals are great because it's basically a direct to owner purchase. And also wholesalers. I bought contracts off of other investors numerous times because they tied it up for themselves. They realized that it wasn't a good fit for them. And I came in and said, hey, I'll buy that contract off you. They walk away with a fat check and I walk away with an asset. So those are really the three ways that I've bought the most communities, but I bought them, a bunch of different ways, including buying non-performing loans and other things. So
the non-performing loans is a great way to go if you know what you're doing.
If you know what you're doing, yeah.
Yeah.
It's risky if you don't, but yeah.
Yeah, exactly. Well, Mario, thank you very much for doing this. How do these people get hold of you if they have questions?
The best way to probably connect with me would be on either Instagram, Mario Dattilo TV, or if you want to learn about the education side of things, you can go to getrealcashflow.com. I'm on every social media platform. I got a YouTube channel all about mobile home park investing. So if you just plug my name in, you'll find me. Love to help out any way I can.
I'll put the links to them down below. How about that? We'll make it easy for everybody. Mario, awesome. Thank you very much for taking the time today.
Yeah, thanks, Joe. This was fun. Appreciate it.
Yeah, it was a lot of fun and very educational. For those of you watching, thank you for watching. And if you could, please give us a like. And if you haven't done so, make sure you subscribe.